Welcome to our monthly Market Smarts video. This video is a short clip to talk you through our Market Smarts document, which is downloadable now. Please feel free to distribute this video and documents to your clients. All the numbers discussed is updated till the end of May 2023. The JSE closed at 75,097 index points. The repo rate was yet again increased and is now at 8.25%, while a year ago it was at 4.75%. The Rand had a tough time, closing at 19.72 Rand, depreciating quite substantially against the US dollar in 1 month. Our timeline for the year reminds us of some of the major economic events and news headlines. Perhaps you would recall the cost of living crisis that the UK started to face, and in August of 2022, Citibank predicted UK inflation could be at 18% in 2023. November, we saw the Federal Bank in the US release a dovish statement, but this was not enough to derail the rate hike cycle. Let's move on to the market commentary. May was an eventful month for major indices. But locally, we saw both defensive assets and growth assets close in the red. Even individual sectors such as local listed property, resources and financials had a tough time. Now, due to speculation of SA's involvement in the Russia-Ukraine war, as well as level 4, 5 and 6 load shedding throughout the month of May, we saw the Rand losing 4% for the month of May, and at one stage the Rand was at 19.80 Rand. A lot of pessimistic market commentators believed that it was going to blow out completely. An interesting economy is that of Mexico, which, despite the aggressive rate hiking cycle, continued to grow their economy for the 6th consecutive quarter. Their rate, however, is at an all-time high of 11.25%. We continue to be mindful of the US inflation data. Wage inflation in the US seems to still remain a bit high, even though unemployment has increased. As the US slows down, it could have a material impact on the markets. In our interesting numbers section, we share the staggering number of 45 billion Rand. This is the value of the stokvel industry in South Africa, and nearly 11 million people belong to one or more stokvels. Given the poor unemployment in SA, we had a look at the staggering youth unemployment. The official definition states it as 62.1%, while the expanded definition argues it is 71%. While Qatar and El Salvador officially has the lowest unemployment data in the world of 0.1%, data is just data, and without much context such as the GDP per capita, we won't comment too much on whether this number has any significance. Moving on to our views from some of the asset managers, Paul Bosman from Granite has recently written a piece where he explains the pain felt in the bond market. Though government bonds remain attractive, other opportunities have also emerged for the team at Granite, such as offshore credit and floating rate shorter dated bond paper. He stated very well that despite all the valuation data, there were very few places to hide in May. Says Fikile, who manages the local listed property fund we hold, and please note that we have closed our local listed property position in some of our outcomes-based models, believes that despite the challenges, there are expectations of slightly positive rental growth and potential for a substantial re-rating of the sector if certain risks such as load shedding and high interest rates are mitigated. Now, every month we feature one of our outcomes-based model portfolios using the 4 investment pillars. This month we zoom in on the first investment pillar, namely delivering outcomes, and specifically focus on the steady growth model portfolio. When considering this model and the first outcome, let's explore it a bit more. If you invested 100 Rand 3 years ago, this model would have delivered 129.30 Rand, compared to what the CISA low equity sector would have provided of 127.50 Rand. Now, the steady growth model is used for short-term investment goals, and a term of at least 3 years is recommended. It consists of predominantly defensive assets with about 35% allocated to growth assets. The advantages and differentiating factor of outcomes-based investing remains that this type of model, where the outcome can be better planned for, can help with financial planning. Ultimately, it can reduce advice risk and also help manage the behavior of the client. We also share some of the market numbers. We like to show the return data for the indices, as it then puts into perspective the return data for the relevant funds or models. Remember that our outcomes-based strategies can be accessed through unit trusts or model portfolios. An interesting point perhaps to highlight could be that though we don't look at relative returns when considering our outcomes-based models, it is great to see that despite managing the models according to the 4 outcomes-based investment pillars, it still offers competitive returns. The optimal growth is a great example of this. When considering the rolling 7-year number, it returned 9.06%, which is very competitive when we consider what growth assets delivered over the relevant period. Also remember that this strategy holds a bit more or has a higher allocation to growth assets than our other outcomes-based models. We also know that from a financial planning perspective, advisors have been under pressure to provide either cash-type instruments, life annuities, and even guaranteed products for their clients. This specific slide shows the bond yields as well as the cash yields offered by some of the larger banks to help you position your portfolio in this tumultuous and very uncertain time. We hope that the information provided today was of value, and please feel free to get in touch with Amity if you wish to reduce the uncertainty of investment outcomes for your clients. Amity Investment Solutions offers you a range of outcomes-based model portfolios and unit trusts, and these are available across all major platforms in South Africa. Thank you for watching, and be sure to follow us on LinkedIn, subscribe to our mailing list, and like and share our updates and videos on our YouTube channel.